Crypto update: Harmony, Celsius, Voyager, Solana, FATF. The crypto market is typically hectic, but last week was particularly insane. First quarter results will offer investors a sense of what the remainder of the year will look like, so they're keeping an eye on this attentively. We could see a lot of volatility in the crypto market if these earnings fail to meet expectations. So hello, and welcome back to Crypto Trends, you all. Today, we'll tell you all about the happenings in the crypto world, so let's get started. The first on our list is Harmony. Last week, a hacker hacked Harmony's cross-chain bridge to Ethereum and stole $100 million. Over the weekend, Harmony co-founder Stephen C. stated the hack wasn't a fault in the cross-chain bridge's smart contract code, but a violation of the company's 5 private keys. Many opponents have noted that many had been told that the cross-chain bridge might be compromised with just 2 of the 5 private keys, as happened here. This makes Harmony's cross-chain bridge exploit similar to the $600 million Axie Infinities bridge hack from Ethereum to Ronin sidechain, which also compromised private keys. Harmony's resolve to finish its trustless cross-chain bridge was mentioned in our last piece about the project a few months ago. Whether individuals affected see their coins and tokens again relies on a few factors. Harmony has offered the hacker $1 million to refund the funds and explain how they got the secret keys. When money is recovered, Harmony will fight for no criminal prosecution. This language doesn't say there won't be criminal charges. On-chain research shows that the hacker has already swapped all the cryptocurrencies they stole for ETH, except $70,000 of AAVE, which is strange. Even at today's prices, $100 million of ETH is a lot. This makes it difficult to cash out through a centralized exchange without being caught. Mixing protocols lack the liquidity to cover large transactions. The hacker may even borrow against it in DeFi protocols like AAVE, which would explain the RSA tokens. Since one coin wasn't directly damaged, it might not suffer much in the medium to long term. Celsius hasn't recovered as predicted, and its CEL token has continued to struggle. As we highlighted in our recent video about Celsius, the crypto platform's failure was triggered by reckless yield-seeking behavior and a decline in Lido Finance's ST-ETH relative to ETH. Mismanagement may explain why Celsius has trouble getting investors. Many potential purchasers are underwater, which doesn't help. The Wall Street Journal reports Celsius is hiring bankruptcy counsel. This means Celsius was in debt, which seems sensible given that the platform processed $8 billion in loans. While it's unclear how much Celsius had borrowed before the company collapsed, the Bitcoin used as collateral was presumably liquidated when crypto values crashed this month. These and other commitments could have left Celsius underwater, owing billions to others. This is supposition because we don't know what's happening behind closed doors. CoinDesk's report that Goldman Sachs will buy Celsius assets at a discount should be regarded with a grain of salt. The CoinDesk piece specifies that this would only happen if Celsius goes bankrupt, which is uncertain. This headline is significant, especially if Goldman Sachs can raise $2 billion to buy the Celsius dip. It would indicate that institutions are serious about crypto and that we may be near the bottom. According to yesterday's story, this is unlikely. Still, it's possible. If Celsius goes bankrupt and Goldman Sachs buys all its crypto for pennies on the dollar, these coins and tokens won't go back to their owners. According to history, Celsius users may get some of their money back months or even years after the company closes. I suppose the first to get fit will be the Celsius elite. We hope not. Bailouts. An acquisition or money injection would be excellent for Celsius. Nexo, which offered to buy Celsius, is now approaching Citibank for acquisition guidance. Celsius allegedly speaks with Citigroup, Citibank's parent firm. Celsius hired Citigroup's previous COO and Riskhead in January as COO. All this suggests Celsius could come back. It would be absurd if cryptocurrency exchange Binance bought Celsius, but CEO Changpeng Zhao recently said Binance wants to buy 100 crypto firms in the next months. CZ also said badly managed crypto projects and firms shouldn't be bailed out, which could apply to Celsius, as CZ was referring to Celsius's competitors BlockFi and Voyager Digital. BlockFi borrowed $250 million from FTX. Alameda Research and Voyager Digital agreed on a $500 million debt transaction. Unsecured loan left a $600 million hole. Voyager Digital made 2-3 Arrows Capital, a crypto VC hedge fund. FTX is reportedly trying to buy a major share in BlockFi and destroy counteroffers from crypto hedge fund Morgan Creek Digital. Morgan Creek Digital took issue with the terms of FTX's $250 million loan, stating that FTX could buy BlockFi for next to nothing if it defaults on its obligations. Pro-crypto SEC Commissioner Hester Pierce highlighted concerns about big crypto companies acquiring smaller ones, echoing CZ's stance that badly managed crypto projects and enterprises should fail. Bloomberg and Alameda Research said FTX CEO Sam Bankman released JP Morgan of crypto, referencing the panic of 1907. The link in the description shows what a crypto bear market during a slump may look like. Dilemma Solana. Sam Bankman-Fried joined Solana inventor Anatoly Yakovenko on stage last week to launch a crypto phone dubbed Solana. Solana, the largest DeFi protocol on Solana, voted to take away cryptocurrency from a Solana whale who had borrowed $100 million in USDC against $170 million in SOL. There were concerns about what would happen to the Unchained SOL pricing and protocol if this whale liquidated their SOL collateral. This Solana whale deposited more than half of Solana's trapped SOL. The idea garnered anger from the crypto community, which isn't surprising considering Solana's DAO was set up shortly before the governance proposal was tabled, and practically all the yes votes came from a single Solana wallet. The uproar prompted Solana to adopt a second proposal, which nullified the first and allowed the whales to keep their SOL. Solana community passed a third proposal to limit protocol borrowing. Solana's whale has been paying off USDC bills and migrating SOL to other DeFi protocols. The whole experience was a wake-up call for the crypto community, especially DeFi users who think they always control their coins. Never connect Web3 wallets to a decentralized app. You virtually always give a D-app permission to use your money and tokens. One of the most frequent frauds is luring you into granting this permission to a phony website promising free crypto or NFTs. Even some of the wealthiest crypto holders fall for this scam. Crypto governance is another can of worms. Switching from one token equal one vote to one identity equals one vote might help. Thorchain Cross. Thorchain's mainnet launched last week, so it also made headlines. Thorchain allows cryptocurrency swapping between blockchains. Thorchain differs from other decentralized exchanges because you can swap native cryptocurrencies like in a centralized exchange. Thorchain's different from centralized exchanges since no personal information is required. Thorchain's available on desktop and mobile for anyone with internet access. Thorchain supports native Bitcoin, Ethereum, Binance Currency, Litecoin, Dogecoin, Bitcoin Cash, and Thorchain's Rune token, which makes swaps possible. Even though it's utilized to pay fees, you don't need room to trade. Thorchain plans to provide support for new cryptocurrencies, including privacy coins like Monero. Thorchain announced a partnership with Binance to commemorate its primary net launch, offering $1 million of Rune between June 23rd and July 7th. Cross-chain protocols like Thorchain will become increasingly vital as governments throughout the world crack down on crypto, starting with cryptocurrency exchanges. Coinbase will force Dutch consumers to submit specific details about crypto wallets they're withdrawing per a 1977 regulation. FATF retaliates. If you follow crypto news, you already know this. Coinbase stated in March that it would start collecting withdrawal data in Canada, Singapore, and Japan. Coinbase isn't to blame, despite what certain media outlets and detractors say. FATF's recommendations have shaped crypto legislation everywhere in recent years. The Compound token is surging on the debut of Circle's Euro stablecoin, EUROC, later this week. Circle's website says EUROC will launch on Compound and Uniswap on June 30th. Comp's price behavior is disappointing as it seems to have taken the biggest beating of all DeFi tokens. Hopefully the EUROC launch will restore calm to the $100 resistance level. Sandbox's Sand token is rallying because Tech Titan set metaverse guidelines this week. This is gloomy for crypto, but Sand holders disagree. Poor Sandcastle. Sand's pricing. Unlike other metaverses, Sand has genuine fundamentals, not naming cryptos. Well, that's all for today's video. We'll be right back with another update. Until then, please hit that like button and make sure you subscribe to our channel.